Hello and good day, everybody. You're with Martin Peneth, Chief Account Executive and Trading Analyst GDMFX. Welcome to today's European Market Outlook. As usual, we're going to start with a short coverage of the North American markets at first. Initial and continuing jobless claims, 12,000 better than expected and 5,000 worse than expected. Trade balance, 8.56 billion, worse than expected. Challenger job cuts year on year, 21.4 thousand higher than previous. Imports and exports in Canada, 0.5 billion better than expected, and 0.16 billion better than forecasted. International merchandise trade for Canada, 0.55 billion better than expected. Unit labor costs, 1.7% better than expected. Non-farm productivity in the US, 1.3% worse than expected. Basically, the feedback of Boston President Rosengren's speech, lessons from US experience with quantitative easing. It is time to consider which design features of the Fed asset purchase program were affected and which were less successful in achieving our monetary policy goals. Without the dual mandate, many of the measures that have been already taken might not have took place again. American economy needs a strong NFP, and economists forecast American employers added 237,000 jobs in January, and the unemployment rate dipped to 5.5% from 5.6% in the previous month. The forecast has been adjusted after December's 252,000 reading also missed expectations. The big question facing the market is if the NFP can break the slower growth trend facing the U.S. economy. JP Morgan downgraded the U.S. GDP growth forecast for the first quarter after a higher trade deficit. The U.S. trade deficit in December widened sharply as a stronger dollar appeared to boost imports and reduced exports, which could see the fourth quarter economic growth estimates revised to lower as more data becomes available. As we know, the Fed are taking a patient stance on tightening monetary policy. This is why a strong NFP in all components is needed to reassure the market that the effects were transitory and the U.S. continues to be the only growth oasis in the desert. A lower than expected NFP could further depreciate the U.S. dollar and add more time to the first interest rate hike from the Federal Reserve. For today, as I said, NFP unemployment in the U.S. and Canada as well. Net change in unemployment and employment rate in Canada, as I said. Building permits month on month, again for Canadian reports. Average hourly earnings month on month, year on year. Average weekly hours, labor force participation rate, consumer credit change. All of those from the U.S. and participation rate for Canada. We're also going to have a speech from Fed's Lockhart today. European markets, the DAX and the CAC are continuing their uptrend. The German factory orders already came out better than expected year on year and month on month, but the industrial production showed some decline from 0.7% to 0.3%. Swiss consumer climate, again worse, and retail sales came up better than expected, 2.2% from 0.2% for the previous period. Euro dollar, 160 points up yesterday, Euro pound 30, Euro Aussie 120, Euro Canadian dollar 30, Euro JPY 200 points up even more, the Euro Swiss Franc 50 points up, Euro Kiwi 120 pips up. Next week, a lot of GDP data all over the EU countries and the Eurozone GDP in total. Short coverage of the UK markets. Basically, the FTSE 100 lost some points yesterday, around 30 points. Interest rates decision remained unchanged, and the Bank of England asset purchase facility came out at 375 billion. Halifax house prices, all positive. The pound pretty much rallied against most of its major pairs, touching 1.531 per dollar, a level not seen since 5-month high against the dollar after the Bank of England kept interest rates at a record low, and disappointing data came out from the USA. No new measurements for the tackling low inflation were introduced by the Bank of England's MPCs. The overall sterling advance in the last 6 months is 2.4% and is the only currency joining the dollar and the Swiss franc in the list of currencies that are on the way up. In numbers, the cable did about 145 pips up yesterday, 185 range, 30 pips down up today as well, versus the Australian dollar, 70 pips up yesterday, 200 range. It's going down today. Versus the loonie, 75 pips down yesterday, 180 pips range. It's going pretty much sideways as we speak. The trade balance numbers are due in just a moment. Moving along to the Asian Pacific region, starting with the Japanese Nikkei 225, which gained about 20 points yesterday, along with absolutely all Japanese indexes. The Australian S&P 200 is also on a positive outlook, along with the New Zealand indices. The situation in the Chinese markets, though, is worsening, and we're looking at only red numbers all across the board. The economic outlooks printed from Japan yesterday in terms of preliminary data showed an upbeat in the economy and growing foreign currency reserves. The main point yesterday from the Asian Pacific markets was Australia's central bank, which lowered its 2050 growth and inflation forecasts and predicted unemployment will continue to rise, underscoring this week's decision to cut interest rates. The RBA is waiting for a pickup in non-mining business investment in Australia to offset tumbling commodity prices, while loose monetary policy, a fallen exchange rate, and strong population growth provide the conditions for such outcome. The central bank said the timing and speed of anticipated recovery remain uncertain. The RBA reduced its forecast average expansion for this year to between 1.75% and 2.75% from between 2% and 3% estimated in November. It lowered projected headline consumer price growth to 1.25% in the year throughout June from between 1.5% and 2.5% seen 3 months earlier. The unemployment and employment reports are due in the second half of next week. In numbers, the Aussie versus the US dollar gained almost 100 pips since yesterday, and versus the euro lost about 120 points, but has managed to push the European currency during the Asian session over the night. The Japanese yen has managed to recover the past losses to a very same extent, but is now on the verge of losing its ground versus the euro. Against the pound, it did about 200 pips move yesterday. Severe movements. Next week, we start with trade balance reports from Japan and China, and also CPI data year-on-year, month-on-month from the second biggest economy. Moving on to commodities, the S&P 500 index had a range of 37 points, now at 2050, 2055. EA natural gas storage change in the US in the week ended January 30 fell by 115 billion British terminal units compared to expectations for a decline of 121 billion. Natural gas storage in the US fell by 94 billion in the preceding week. The futures plunged to a 32-month low on Thursday after data showed that the US natural gas supplies fell less than forecast last week, underlying concerns over a weak demand. The crude oil prices closed more than 4% higher yesterday as conflict in producer Libya, an expected boost in oil demand following China's central bank easing, helped the market rebound. The West Texas Intermediate had about $5 range, trading at 51.60 per barrel currently. Gold had also a range of $17, trading at $12.67 as we speak. That was all from me from today. Thank you very much for your attention. Cheers, and I wish you a successful trading day.